Hello, my name's Steve Ashworth. I am Head of Employer Solutions here at Francis Clark, and we're just going to run through some of the hot topics at the moment that relate to employment tax. We've broken it down into three sort of main areas. So we're going to first have a look at about the latest on off payroll. Then going to touch about sort of the opportunities with company cars and cycle to work schemes, where this might be if you've got a green policy or you just want to actually sort of, do things a little bit differently for your employees. And then, as it says, we're going to just have a little bit of a sprint through at the end, just on some of the very sort of recent developments that have come out of HMRC. Right, let's make a start. Um, Off payroll, I think the title says it all. They think it's all over, but it isn't. Um, I mean, this status is nothing new. Off payroll is slightly a new development since 2021, when the off payroll working rules came in. But we've had IR35 since 2000. This is for those people who are working or being engaged through their limited companies with you as their business. Now, there's been a few high profile cases more recently, mainly around Gary Lineker, who most of you, I assume, will probably know, and Stuart Barnes, who is an ex rugby player and TV presenter now. Both of these cases went to tribunal. They both won against the revenues. So they demonstrated that they were actually working within well, outside, I should say, of the off payroll rules, despite what HMRC were trying to argue to differently from that point of view. So they both won. There was a lot of publicity about them winning, but as with many things to do with sport, this literally was a game of two halves, and the reasons for both of them having won in the first instance was for Gary Lineker, it was very much a technical point to do with the way he'd set up his business as a partnership and the way he entered into the agreements with the engager. Stuart Barnes was all mainly resting on the fact that he was in business in his own right as far as the tribunal and that were concerned, which both had the indicators towards them being self-employed. However, HMRC, well, they weren't particularly happy with losing. They never are happy when they lose any cases whatsoever. And they've taken both of these now to appeal. Some of the momentum that they will have had with all this follows some recent wins by HMRC with a case called Paul Hawkesby, where it was shown less so that being in business in your own right was an indicator towards self-employment. And they've also successfully taken back the very high profile case for Kay Adams. And they've managed to get that to go to the upper tier tribunal, who is a TV presenter. And again, a lot of what Kay's Adams case revolved around was to do with the sort of being in business in her own right, that she was offering her services as a presenter to numerous programs and having lots of different roles and that in to be sort of engaged with various organizations. So I think this gave a little bit of momentum back to HMRC because they'd had a couple of sort of successes. So say Gary Lineker, Stuart Barnes, both now back at appeal before the tribunals, and really we don't quite know where they're going to actually end up going again, which just means status off payroll IR35, however you want to refer to it in many cases, is still on the agenda. And as a business, you really do need to be looking at this and considering sort of the importance and everything of it, where you engage anybody who is not through PAYE, you need to be thinking, have we got the system, the process, the records in place to be able to sort of demonstrate this to HMRC? We've listed down a number of factors, many which people are familiar with control, mutuality or obligation is an obligation on both sides to be offered work and to accept work, substitution, financial risk, and all of these are within HMRC's check employment status tool for tax, that commonly known as CEST, and it's these sort of areas, indicators that will look at and reach a decision. So as an organization, as a business, have you covered all of these off? Have you looked at it all? Can you confidently say that we don't have any issues with any of our workers who we have engaged as self-employed? If it's the case, you can move on. If not, it would be worth your while speaking to me or one of my team members, and we can go through this and we can say what you need to have in place. Next area we're going to have a look at is to do with sort of a lot of the questions we get at the moment as businesses have introduced more green policies under their environmental, social, and governance policy side of stuff that it's key for a lot of businesses these days. And as part of this, businesses have looked at how they can be more green, what they can offer to their employees in the way of benefits. And two areas which have come out of this, one has been in place for quite a long time, one over the last couple of years has gathered more momentum, but it's the Cycle to Work scheme and low emission vehicles. These can be done under salary exchange, salary sacrifice schemes. Often we prefer to exchange salary rather than sacrifice salary if you're an employee. And there can be savings of national insurance. If you look at a standard car, and you can compare what the difference is if you actually have low emission vehicles in your business, at the actual rate at the moment is down at 2% compared to what might be for a standard car 31%. So the benefit in kind can vary, as in this example, from 9,300, but come all the way down to £600. So quite a difference if you use electric vehicles. And now that the market has more availability of electric vehicles, it's far bigger range than it was a few years ago. Those opportunities and that are there. A low emission vehicle is anything that's under 75 grams per kilometre, but fully electric vehicles fits nicely into that, where there is zero emissions from it. And like I say, at the moment it's 2%. It is due to increase from April 2025. There will be then 1% incremental increases each year. So it is due to go up, but it's still comparable. It's still a lot better than sort of the full sort of benefit in kind you get for, shall I call it a normal car from that perspective. What savings and that can you actually make? Well, this is where you want it perhaps cost neutral from your point of view, from the employer. So we've given an example here in the table, which shows sort of what savings can be made if you actually use a company car and use a low emission vehicle as that company car for your employees. It's where you get the employees, they actually cover the costs of the lease because, they don't have a company car now. They want a company car. They don't want to buy a car themselves. So there's opportunities and everything here for them to make savings. And as you can see, you know, the savings are there from both a tax point of view and also an employee's national insurance point of view as you work down and you ultimately arrive at the net pay. And you can see that the sort of the net pay figures compared to the net pay for the normal employee, there's a difference there. Now you might be asking yourself, hang on, Bo, that's saying the net pay is lower than if the employee hadn't had the car for obvious reasons. But when you factor in that in normal circumstances, the employee would have had to be buying this car on lease from their normal net pay, then you can see in the green box a total package that overall, from the tax and national insurance and everything, there's around a £1,400 saving overall for the employee. This then carries on as well for the employer, and there is a saving in the employer's costs for every car that they have in place. So there's savings for the employee, there is savings for the employer. And it makes sense to do this. It can be quite complicated for the employees to understand. And that's where we come in, because we can come out, we can help you introduce a policy, we can sort of walk you through what you need to be doing, and we can actually speak to your employees to actually explain how salary exchange does work in practice and why they are better off. The same sort of thing works for cycle to work schemes, which again, they've taken off recently. There's been a lot more inquiries recently about cycle to work. I think people had them in the early stages, then they forgot about them. And again, it's a way for the employees, again, under maybe your ESG policies, to be provided with something which is far greener and in a tax efficient way. So again, anything to do with cycle to work schemes or looking at introducing a salary exchange scheme for your company cars, we can help you with on that. Okay. Right, let's just have a look at a few final points. We're going to go through these fairly quickly. So if you do want to come back to me, my contact details will be at the end, and we can chat through these in a little bit more details. But these have all come out recently. NIC refunds on car allowance payments. So this is where you pay a car allowance to your employees for using their own car. You make a payment of less than 45 pence per mile. Okay, so you don't pay the full maximum of 45 pence per mile for each business mile they actually do. And what you've got the opportunity to do now is actually use that car allowance, which will have been subjected to tax and national insurance, to actually claim back some national insurance for both you as the employer and also for the employee. This is fairly new. It has been going through some tax cases for a number of years, and it's just been accepted by HMRC that this principle is correct and NIC refunds can be due. If it's something you want to think about and look at, it's worth considering putting in protective claims for the past, because every 6 years, I should say, a year falls off for national insurance. So you can go back the full 6 years, but if it's going to be, after the end of a tax year, it might be worth considering putting a protective claim in, and we can help with that. We are still waiting for some more detailed guidance from HMRC on this, but we can certainly talk to you and help you introduce and look at this. I would say it's probably best for those businesses where there is high business mileage actually taking place. And another area which we can look at is pension schemes. And we've had a number of cases come up recently where there has been double claims for tax relief. And this tends to be some confusion around what are referred to as net pay arrangements, which usually come out of a gross pay rather than pension contributions coming out of a net pay. And when they come out of a net pay, the pension provider actually grosses up or gives credit for the tax relief. But what we've found is that on some payrolls, they've been set up incorrectly. and that means that there's been a shortfall of national insurance and possibly tax as well to to HMRC. So need to look at this and just make sure your pension scheme is set up correctly and the deductions are being done in the right way from the right amounts. Travel expenses, this is all on the back of hybrid working. And please, what we just want to emphasize is don't take it just because somebody is now working from home that they can claim their travel expenses when they come into the office. If it is still an arrangement that people are you're allowing them to work from home 2 days a week and then travel into the office those 3 days a week, it doesn't necessarily mean that on those 3 days it's not an ordinary commute journey and it's not tax exempt. So if you're paying expenses for people to travel from home into the office, care needs to be taken. And I would suggest you have a conversation with me or the team again on that matter. And finally, what still happens, and again, a lot of this is on the back of hybrid working, is employees who have got workers who are either going overseas and basing themselves overseas or coming to the UK. It's not straightforward just to sort of accept, well, we're still paying tax in the UK on the UK payroll. Do we have any issues in that other country? And the chances are there may be risks of that employee working in that overseas country for both the employee and maybe even you as the employer from a corporate point of view. So again, do you know where all your workers are? Hopefully you do. Do you know what countries they're working in? And if you do find them that they are now working from an overseas location, I would suggest and recommend that you come and talk to us on that as well. Okay, thank you for listening. That's a little bit of a speedy look at employment tax and what is relevant at the moment. If you do have any questions, anything you want to follow up on, go into anything in more detail, please do get in contact with me and I'll be more than happy to talk it through with you. Thank you very much. Bye.